Recently, Nvidia, a prominent company in the artificial intelligence and semiconductor sectors, faced a significant setback. U.S. authorities initiated an investigation into the company, causing its market value to plummet by 250 billion yuan overnight. This event has overshadowed Chairman Jensen Huang's aspiration to become the world's wealthiest person. Some online commentators even humorously remarked that Jensen Huang's dream of being the richest man in the world is now shattered. What prompted this investigation into Nvidia? What implications will it have on Nvidia's future competitiveness and growth prospects? Have other major U.S. tech companies encountered similar investigations? What were the outcomes? What exactly transpired behind the scenes? What are the underlying reasons and rationale? Stick around as we uncover the complexities surrounding Nvidia's current challenges. Nvidia currently stands as a major player in the global artificial intelligence sector, holding a position among the top 3 companies worldwide in terms of market value. The company's success is attributed not just to its advancements in high-performance computing, but also to substantial investments in artificial intelligence and deep learning research. Renowned for its pioneering role in GPU technology, Nvidia consistently releases more powerful products to meet the market's increasing demands for processing complex algorithms and managing vast amounts of data. Headquartered in California, Nvidia was co-founded by CEO Jensen Huang, who is of Chinese descent, alongside 2 American partners. Huang's leadership and innovative vision have been instrumental in driving significant advancements within the tech industry. As the driving force behind Nvidia, Huang has led the team in overcoming technical challenges and propelling industry advancements. Established in 1993, Nvidia has rapidly risen to become a leader in its field and the second-largest company by market value within a span of just 3 decades. Huang and his co-founders maintained a distinct vision, continuously guiding the company in developing cutting-edge technology products and exploring new avenues for growth. From its inception, Nvidia has maintained a strong focus on chip research and the burgeoning artificial intelligence industry. In its early days, these fields faced limited interest despite the onset of the internet era, resulting in Nvidia experiencing initial market neglect and financial instability that nearly led to bankruptcy in 1999. Despite these challenges, Huang and his team persevered, steadfast in their belief in AI's future and the direction of innovation. This determination drove Nvidia to continue advancing chip technology and developing new solutions, often operating on funds that would only sustain them for short periods at a time. Nvidia's groundbreaking development of the graphics processing unit, GPU, not only revolutionized the gaming industry but also significantly advanced computer graphics technology, enhancing the concreteness of models and programming. This success propelled Nvidia into a leadership position in high-performance computing and the AI sector. Recently, Nvidia has been under scrutiny from U.S. authorities, leading to a notable decline in its stock price that has garnered widespread attention. The investigation stems from stringent U.S. export control, reviews on high-tech firms, and concerns regarding Nvidia's business expansion in China. Despite these challenges, Nvidia remains committed to innovation, aiming to push technological boundaries forward. Moreover, its chip advancements have laid a robust foundation for further AI development. Over the past 5 years, Nvidia has continually pushed the envelope with new chip designs and processes, accelerating innovation across all stages. As the market increasingly values AI and innovation, Nvidia has emerged as a global tech leader by 2024. Achieving substantial market value and significant milestones. Nvidia's technology and chip products are now pivotal in the global AI landscape, making it the highest-valued chip company in the U.S. and ranking 3rd in market value, following Microsoft and Apple. With such rapid development and promising prospects, Nvidia's future appeared promising and impressive. However, on June 6, 2024, Nvidia faced a severe setback when its stock price plummeted due to reported critical issues with its next-generation GPU chips. Investors swiftly reacted by selling off shares, causing Nvidia's market value to plummet by hundreds of billions of dollars in an instant. This decline prompted investigations by the U.S. Federal Trade Commission and the Department of Justice, contributing to a 1.18% drop in market value that day. While seemingly minor, this decline translated to a significant loss of $33.5 billion, approximately 250.57 billion yen, given Nvidia's substantial market presence and shareholder base. The ongoing investigation poses substantial long-term risks to Nvidia's commercial standing and market position. Beyond the immediate financial implications, Nvidia must swiftly enhance its compliance management to restore trust among investors and consumers. Despite the tumultuous period, which sparked online speculation about Chairman Jensen Huang's aspirations to become the world's wealthiest person, Nvidia persevered. Rather than succumbing to the challenges, Nvidia intensified its focus on technological innovation and market expansion with renewed vigor. Amid the burgeoning fields of AI and deep learning, Nvidia capitalized on opportunities driven by its advanced GPU technology and deep learning platforms, achieving notable advancements. Nvidia's prowess in chip research has surpassed that of its rivals like Intel and AMD. Over the past 2 years, Nvidia has consistently gained market share, increasing by 10% each quarter. Moreover, during peak periods, Nvidia has demonstrated remarkable market share growth rates of up to 33% annually, a testament to its leadership in smart technology and AI. This exceptional performance has firmly established Nvidia as an influential industry leader, garnering widespread recognition for the outstanding quality of its chips. These advancements have positioned Nvidia's products among the best in the market, earning significant acclaim and fostering high expectations among industry stakeholders. Unexpectedly, Nvidia, despite its popularity, faces a U.S. market investigation due to concerns over potential market monopoly practices. CEO Jensen Huang's absence on a Taiwan business trip during the probe sparked speculations, including ties to trade disputes and complex economic and political maneuvers, with some suggesting media hype as well. Despite regulatory scrutiny impacting its market valuation, Nvidia's predicament isn't unique. Major tech giants, such as Microsoft and Apple, have encountered similar investigations, underscoring a common occurrence in the industry. The U.S. places significant emphasis on fostering stable market development, wary of scenarios where one company monopolizes the market. Such dominance could disrupt market dynamics and stymie the growth of other firms. Therefore, the U.S. promotes a diverse array of market participants to encourage innovation in technology and services, safeguarding consumer interests against potential price hikes and service deterioration due to monopolistic practices. Consequently, such investigations are routine in the U.S. and serve as safeguards for market integrity. Nvidia's current antitrust investigation aligns with this pattern and is customary for a company of its stature. Despite potential economic implications and penalties, Nvidia's resilience stems from its acclaimed chips and smart products, which dominate 80 to 90% of the market share. Nvidia enjoys a robust global brand image, a broad audience base, and considerable influence. Any sanctions imposed are unlikely to significantly undermine Nvidia's position, viewed more as minor setbacks in its broader strategic landscape. Nvidia's chips and AI technology remain pivotal to its ongoing and future development efforts. Recently, Nvidia experienced a sharp decline in its stock price, plunging by 5.5% and erasing approximately $130 billion in market value. This downturn, the largest single-day drop since May 31st of the previous year, has left investors and tech industry watchers taken aback. Several factors contributed to this significant decline. 1. Automotive sector weakness. Poor performance from key U.S. automotive players like Tesla, Broadcom, and Costco, closely linked to Nvidia, negatively impacted investor sentiment and Nvidia's market performance. 2. Federal Reserve speculation. Disappointing U.S. employment data sparked speculation of Federal Reserve interest rate cut, unsettling investors in tech stocks such as Nvidia. 3. Insider stock sales. Nvidia saw significant insider stock sales, notably by director Tench Coxe, who sold 200,000 shares worth around $170 million. Despite Cox's long tenure and early investment, this raised concerns and likely affected investor confidence. These factors combined to create a turbulent trading day for Nvidia, highlighting the inherent volatility and interconnectedness within the tech sector. As Nvidia navigates these challenges, observers will closely monitor how the company adapts its strategies to maintain investor confidence and sustain its market leadership in high-performance computing and AI technologies. Despite Tench Coxe's reduced stake, his ongoing influence at Nvidia remains significant. Despite Nvidia's recent stock decline, experts note its strong fundamentals support its market position. With solid revenue growth and profitability, driven by essential AI computing chips, Nvidia shows resilience amid market fluctuations. Investors and leaders should focus on Nvidia's strengths and long-term prospects. Meanwhile, increased U.S. regulatory scrutiny on AI giants like Microsoft and Nvidia signals potential competition challenges ahead in the AI sector. Compared to the proactive EU Artificial Intelligence Act, which categorizes AI applications by risk for consumer safety, the U.S. AI regulatory framework is evolving. Despite challenges, Nvidia maintains technological innovation and market demand advantages. Investors and managers should focus on Nvidia's innovation and compliance with market rules. Enhanced regulation may promote fair competition and protect consumers. Nvidia's situation underscores the importance of ethical market practices, fair competition, and continuous improvement to maintain consumer trust and market longevity through regulatory compliance. What are your thoughts on the investigation into Nvidia's market practices? Do you think it will impact their position in the tech world? Share your insights in the comments section below. Join the Revel Discovery community by subscribing to our channel, where we dive deep into the world of technology and innovation. Don't miss out on our continuous exploration of cutting-edge technologies and their implications for the future.